Now, that was a great segment by Elise, who did that little stint for us then. Now, Elise, it's her birthday today. So for all of those out there listening, don't ever forget Elise's birthday. I nearly did. So I'm playing catch up right now. So happy birthday, Elise. And in the meantime, that was a great survey, and living near the beach does resonate. We have been getting some amazing results. Just before Christmas, you'll remember, got $1.8 million in Largs Bay, which was a record by about $600,000. That's pretty cool. And we certainly are getting a lot of activity down all along the coastal area. So, yep, we agree with those results. Now in the studio, let's get on with it. Tony Romano, and he's runs ANZ Bank actually, but he's one of the senior financiers. Kerry Ackermans, who does run our rent roll, and we have over 2,000 clients in that. She's our GM. So welcome to both of you.
Thanks,
Welcome.
Anthony.
Anthony.
Now let's get underway, Tony. Just give us a background to, apart from the fact you're the best dressed I've seen in a long time. So for those watching today, this is how you should dress.
For a banker, you mean?
Yeah. Now, Tony, your background.
Sure. Look, thanks for the invitation today. It's great to be along here today. But look, I've been with the ANZ for 29 years and had a variety of roles throughout that, from lending to deposit taking to financial planning in recent times. So basically what I do is look after people's wealth creation. So that might involve self-managed superannuation funds, helping people buy property in self-managed super, helping people invest in direct shares, helping people grow their wealth. So when they retire, they've got enough to meet their lifestyle requirements. So that's what I'm heavily involved in now. I have probably 200 clients that I look after their wealth creation from not just their own, but their family, and a service proposition is what we sort of provide to our clients.
So Tony, in the old days, a bank person was to go and get a loan.
Correct.
Buy a house, buy an investment.
That's right.
That was about it. What you're saying now, the banks are dabbling, or are they seriously in this space?
No, serious in this space. I mean, the Future of Financial Advice, which is legislation which comes in on the 1st of July this year, basically governs financial planners within a banking arrangement. So what we're looking at is providing a holistic advice to clients. So holistic advice involves their whole financial requirements. So it might be lending, it might be investment property, it might be their superannuation, it might be their children's education. So in all aspects of life, people are looked after, whether they are applying for age pension or whether they are simply pre-retirees. We're just trying to provide them with a lifestyle that they want. And this is where the association is great with TOOP, for example. Like if a customer wants to buy a property, I'll refer them to TOOP+TOOP because I've had experience with TOOP as well. So that's, it all works as a service arrangement.
Great. Now, Tony, normally this week it's the showdown weekend.
Yes, it is.
Normally we have a big debate. We were going to debate online versus press.
Yes.
And then everyone just pulled the pin on it, not us, which was quite funny, really. But we would historically have a debate between property and shares.
Sure.
So we're in the kitchen with you on the weekend. Trusted souls. Tony, you're a financial advisor.
Yep.
I've got some money. Do I put it into shares or property at the moment?
Sure. Look, it comes down to a client's objectives. So, for example, different clients want a spread of investments. So I'm not saying put all your money in shares or all your money in property. So what they like to see is a diversified portfolio or diversification, which basically means that if one of the markets is down at any one point in time, the other market's not necessarily down either. So shares are bought mainly for a number of reasons. One's for dividend yield, the other's for franking credits, which are the tax paid by the company, so the person gets that refunded, and also for capital growth. But as we know, shares are very volatile and you get a daily read on them. So a lot of people are wary of shares and think, okay, well that's not the area for me. If a customer is a retiree, then they would probably lean towards property, or if they're more stable, they would lean towards property. Whereas if a client is more looking for capital growth and a quick win, so to speak, and income from shares, they will go towards the share market. So I don't say go one way or the other. I say have a diversified portfolio, have some in property and have some in shares.
Tony, the lady sitting next to you oversees 2,000 residential properties and something like about 1,800 landlords who are in the business of residents of housing. So are you recommending at the moment people start to buy properties given the market's so conservative and down a bit?
Well, the environment is, the interest rate environment is conducive to borrowing at the moment. So we're seeing also construction taking off with the $15,000 grant that's available to the end of June, for example, for new buildings. But at the moment, I mean, the property market is probably due for a rise again. So because of the conducive lending environment. So banks are starting to lend a lot more money towards property. And I think, as I say, Australians have a love affair with property. You know, they like to see, not only just for investment properties or their own personal residence. I mean, we're not a nation of renters. We're a nation of you know, we want to buy our home and have equity in the home. But also, I was talking to Kerry earlier about self-managed super funds. I mean, that's another avenue where people can use that and borrow money inside their superannuation fund to buy an investment property, for example. And that can form, the rental income can form part of their retirement savings. And also the capital growth in that property can form part of their retirement savings. So, you know, there's a lot of avenues for property at the moment because the environment is conducive to that. Shares, on the other hand, have increased in value as well. You don't really know whether, you know, those dividends will be maintained in the future. And, you know, we saw the other day with General Motors Holdings, for example, you know, suffering. I mean, a lot of companies are still suffering, so that will compromise their dividend payout ratio in the future.
Kerry, you're seeing many of our landlords getting into self-managed super funds with their properties?
Well, that's why I asked Tony about it earlier, that it's an option for them to look at, and particularly where they've only traditionally just rented their family home out because they've moved on. Now, to diversify and increase and build their portfolio, that's something they can start using with the market being so good to buy into.
So are people upgrading their portfolios? Like, for example, a multiple landlord maybe have 3 properties. Are you starting to see that they're trading, starting to sell off the cheaper one or the one that needs maintenance and buying?
I think they're starting to look at it, and what they need to do is to move on it, because when a good property comes up, it gets snapped up by an investor, so now would be the time.
Now, do you two communicate much on a professional level, or is this it today?
Well, we have done, through Deb.
we have done because I'm with
Yeah.
TOOP, and I have probably 8 properties with TOOP, so which are managed through TOOP and TOOP.
Yeah.
So, you know, but I was just, we were discussion around self-managed super, just for example, like, you know, if we buy a property in our own personal name, the income's subject to our marginal tax rate. The capital gain gets assessed on our marginal tax rate. So if we structure it under a superannuation fund, potentially there's 0 capital gains tax and 0 income tax on the rental. So it's, you know, this is an avenue that's just starting to sort of be fed out there in the press, and there's not much activity in that area, and that's where I see a lot of growth in the future. And as far as property investment goes as well, it forms a basis of, well, that's my superannuation fund right there in that property, you know, rather than some sort of obscure fund manager who you don't even know where they're investing the funds.
Well, you're in control of it, aren't you? You
Correct.
can see what's
That's
happening
right.
and you're making those choices.
Yeah.
And accountants don't naturally bring up these things. It's
No.
financial planners. And if
Correct.
people aren't aware of it, they won't do it.
Correct. And I'm seeing customers myself who have direct properties, and they're starting to turn them over because they're looking to buy properties that are, you know, sort of upgraded, and they're actually able to yield a better rental return as well. So at the moment, if the market is conducive to buying because of the prices are low, obviously the yield's going to be higher because the rental hasn't come down significantly. So it provides a better option than what it would have perhaps in the halcyon days when prices are a little bit higher.
And it's good to get out of those properties that cost a lot of money to
Absolutely,
maintain
to
and get into
maintain.
something that's less, so you're maximising your returns then.
Correct.
Now, I've got 1,000 questions. We're going to cover them a bit later in the show, so we'll be back in
1,000?
Yeah, well, not quite. We won't make 1,000, but we'll have a go. Now let's go and look at some solds, some going.